What's up everyone, it's Gabbie Trades here and welcome back to the channel. In today's video, I'm going to walk you through a trade that I took step by step using my RTM model, using order blocks as well and fair value gaps, which are a very basic concept. I want you by the end of this video to know exactly how to spot and execute entries like this yourself. This was a short on Bitcoin when I risked about 1 hour and I ended up making roughly 15 hour as price snapped back into my RTM target. However, I want you to focus less on the profit number and more on how systematic this is. I didn't feel like shorting, I didn't guess, I followed a clear RTM model plus the confluences and I just executed. I'll break this down in 3 layers. We're going to look again into the RTM framework, so that means how I define dealing ranges and where price should revert to. Then we're going to look at the points of interest, which are all the confluences that I chose for the entry, and then we're going to look at the execution, which is the low time frame triggers, stops, and targets. All right, everyone. So this is particularly the trade that I was referring to. This is a live trade that we took on Discord literally 2 days ago on Friday, and the results are proven. It's all real, taken real time, and you can see exactly today how I took that trade. So you can go ahead and find these kind of setups on your chart. So first things first, actually, let's draw this together. On a lower time frame, as you can see, we already have lines because we have a higher time frame price range. Let's just look at that real quick. This is the current high time frame range that we're dealing with. If you guys are still confused how to draw these, watch the previous video I posted on my YouTube channel specifically talking about these ranges and how I draw them. And by the way, I use the exact same example for this. However, now we're going to be focusing on the lower time frame ranges because yes, you can stack them on top of each other when you're looking for short-term trades. So you have clearly a swing high here, swing low here. Again, if you don't know how to draw these, I highly recommend you go ahead and check out the previous video. But this is the current dealing range when we have the premium between 0.786 and 1 and the discounted zone between 0 and 0.236. So far, so good. So what am I observing here in this current range? Well, of course, I'm going to look to the left side and see what happened with this leg down. So first of all, it's a leg down, so I will assume a bullish bias immediately. All right, so looking at this current leg, what can you observe? Well, we have 2 fair value gaps over here on the 4-hour time frame. And let's assume when price was trading already here, I had even one of my members already shorting here. And one thing I said to him, your stop loss is way too small. You need a bigger stop loss because as per model, you can short from the 0.786. You're not going to be wrong, but you need to put your stop loss way above the +1 territory. So in the premium, above the premium. Correct? So why and how I found out that this price is going to continue up and is going to continue taking highs? Well, simply because we have a very specific rules for the fair value gaps that we're trading with. Okay, so this is the fair value gap. Let's mark it together. The specific one that I was referring to on a 4-hour time frame. So one rule with the fair value gaps is if you have a body close on the specific time frame you're looking at the fair value gap, if you have a body close above this fair value gap, that is going to automatically mean that you are now targeting this high. So this is exactly what I observed with this bullish candle over here. So now I was expecting for this high to be targeted. Not only that, I also observed within the range, within the current range, where was price maintaining itself? Where was price finding support? Well, that was at the 0.5 of the current range. So what does that mean? Well, that means, and I explained this in the course, what that means is that usually price is going to exit to +1 zone, right? So because price is showing strength in the 0.5 in the equilibrium of this price range, that usually means that price is going to exit +1, right? So because of that, I was also expecting for this high to be taken. And also when I went on the higher time frame, guess what did I find? Well, I did find that we also have a fair value gap on a 1-hour time frame that was also breached with a body close above it. So therefore, that meant for me that this high is also going to be targeted. And if I'm in a bearish price leg, and there was other confluences here, by the way, to take a short, which I go in depth in my course specifically for this setup as well, then I knew that I'm looking for simply liquidity sweep on a lower time frame to enter this zone with extra confirmations. Now, once again, even if you take the 4-hour high, you do have an entry over here. Specifically, I took this entry with the help of volume delta profiles. This is going to be for a whole other video, but again, I explained it in my course. It was very simply tracking this move up here, finding out that in these two bullish candles, there was a lot of volume spiking up, and then price reversed very aggressively, leaving almost no buyers in this specific zone. So that's how, on a retrace of that zone, I managed to catch a more specific entry. But that's for a whole another video. If you want me to make this video for you, make sure to leave a comment below and I will do it. But again, even if you wanted to short at the 0.786, all you needed to do is put your stop loss above the 1 and always target first take profit at the 0.5. So in that case, if you have done that, this would have been a roughly 1 to 2 trade down here, or 1 to 1.5 R. This is why you need to have the extra knowledge, which I also teach on the course for the fair value gap. So in that case, even if you shorted above the 4-hour, you would have ended up with 1 to 12 RR, which is pretty good risk to reward. And I want you to notice, I didn't chase, I didn't move my stop randomly. I simply let the RTM idea plus the other conferences to structure the work. If you just want to repeat this one model, journal it, and stop changing strategies every week, you'll be miles ahead of most traders. If you want to see trades like this live and not just in hindsight, jump on my free Discord. The link is in the description box. I'm sharing there the levels, the ideas, and you'll see how I apply the RTM logic in real time. My full trading course, where I go deep into the RTM model and all the other confluences like SMT divergences, risk management, ranges, is currently at 40% off. If you like how structured this breakdown was, that's exactly how the course is built. And if you want more tools that do some of the heavy lifting for you, check out my indicators, because now you get 30 days free trial so you can test them with your own strategies and see if they help your execution. And finally, if this breakdown helped you, smash the like button, subscribe, and hit the bell so you never miss my US live streams where I apply all of these stuff in real time every week. Thanks for watching, and I'll see you guys in the next video.